One of the uncomfortable truths that, I even have a tough time discussing sometimes is that retail investors most often lose money in cryptocurrency. The little guys, the smaller fish swimming around among the sharks and the whales, right? And myself included. In fact, retail always loses first and gains last as a rule in terms of all the major groups of investors in a given market. And that sucks. But of course, not all retail investors lose out on the whole. And today we're going to go over 3 of the biggest reasons why retail investors suffer the most and typically for the longest. But more importantly, the steps you can take, what you can do in order to increase your ROI while also lowering your risks at the same time. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. Look, I'm assuming you're retail and you're not a multi-billion-dollar whale. If that is the case, and if I'm right, then I wish you all the very best of luck if you choose to invest. Just remember that I'm not a financial or investment advisor, nor is this video official financial or investment advice. One of the main reasons why retail investors tend, on the whole, to lose first and to win last just boils down to a lack of good information coupled with limited tools, so a limited ability to seek out better information. If you look at what we're doing here at Altcoin Buzz, we are well aware of this obstacle. This is something that we try to overcome. That's why we talk about where we get our information as much as possible. We try to be transparent, right? Plus, we also endeavor to share some of our favorite tools. So things like Dune Analytics or Artemis, those are 2 that we really like. Also Arkham Intelligence. Take this transaction here. It is showing Binance moving $2 billion from its hot wallet to its cold wallet on Solana. This is just a quick example here anecdotally, but it's a pretty good sign that they're selling by them and their market makers on Solana is over for now. Keep in mind that there are 3 main types of investors. We have professional investors and institutions. Then we have those that work in the industry. These could be insiders. But third, we have the retail public. And it's the retail public that doesn't really necessarily know, doesn't necessarily use these kinds of tools. The other 2 groups, the first 2 groups that I mentioned, they do, or perhaps even they pay people to do it for them. And it's a big reason why they make more money than you or me. It's a major advantage. For example, here we have a chart. Do you know how to read this? It's a stablecoin supply chart from Artemis. And at a glance, do you understand what it's telling you? Well, one thing that it shows us here, if we look at the last 6 months, is that there's no stablecoin that is really challenging USDC or USDT. Although we do have PayPal's PYUSD, which kind of surprisingly is in position number 3. Another big thing is that despite the poor price performance lately, Ethereum is absolutely crushing in terms of stablecoin growth, which is one of those important, I would argue, behind the scenes metrics. It is significant. And that is new money, of course, coming into the ETH ecosystem. And most of it is going into DeFi. So maybe that means putting Uniswap, Aave, or Morpho on your radar if it wasn't before. What the numbers show us is that the growth is certainly there. But that's the thing, right? If you only looked at price and not some of those deeper fundamentals, maybe you wouldn't come away with the same conclusions. But the conversation is not just about third-party tools, ones that I've already mentioned, so Artemis, Dune, for example, because every chain has a block explorer too. Not all block explorers are created equal. All of them have a little bit of a learning curve, some more than others. But have you ever looked at a block explorer to do things like confirm a transaction or maybe confirm what your balances are if you don't have your wallet handy? Would you be able to tell something like this is happening? Because in this case, we have BlackRock, which is moving ETH to Coinbase Prime, $135 million worth. Now, what we don't know is if this is for Coinbase to dump on its exchange, or possibly if Coinbase Prime is taking custody of new Ether purchased for BlackRock's ETH ETF. This would require some further research to know for certain and to find that out. But beyond that, you also need block explorers to find whale wallets and smart wallets to track if you want to see what the smart money is doing. And of course, the transparency of on-chain transactions means that anyone can look up this kind of information. And so the difference, again, in broad strokes here, but one of the big differences is that smart money does this kind of stuff. And a lot of retail money simply does not, whether that's because they can't be bothered or because they don't know about this kind of stuff. So that's the negative. But the positive, I guess the encouraging part is that it's relatively easy to change this. And you can comment below if you want us to do some tutorials on some of these tools that we use. Of course, we kind of go over them on a regular basis, but if you haven't been exposed to them previously, keep some of these names in mind and just understand that it's not all that difficult to get into them and to start using them as resources. Let's now talk about better money management, because another pretty big reason that retail finishes last and tends to do worse is their money management and the skills inherent in it. Professionals and insiders know their win rate is not going to be high. For most traders, actually, it's not, believe it or not. But let's say you only win 30% of your trades. That's a relatively modest figure, but that means you can still crush the returns if you have sound money management practices in place. Money management is just what allows you to lose small, but then win big when it counts effectively. This is kind of what the reference to positioning sizing means. Retail tends to just ape into a project that they like, whereas professionals have very serious, very disciplined limits on the size of their trades. And often it's a risk of 1% on their portfolio. Sometimes it's less than that. If I were to put that into concrete numbers, it would mean, for example, only risking $100 on one trade with a portfolio of $10,000. The fact is that when it comes to retail, and I'll include myself here, there's not a lot of us that are managing our positions in this way, not that responsibly at least. In fact, chances are that for a lot of us, we're kind of more aping in with whatever dry powder we have left and hoping that we can ride out the volatility. And that's the point here, right? That's kind of what I want to hammer home. The professionals are not guessing. They're cutting losses as quickly as possible so that their winners can run. There are some great courses out there and money management programs for traders from the stock, the bond, the commodity worlds, obviously well beyond cryptocurrency, that you can find if you want to learn more about how to properly manage your money, so to say, so that you don't round trip anymore. Also, and more importantly, you live through another bear market to get to the next bull market, because that's not always the easiest thing to do. And so there are strategies that you can employ that will help you realize that. This Altcoin Buzz Spotlight video is sponsored by SWE, because look, although the market has changed, SWE keeps pushing and it keeps breaking records too. The Miston Labs team, which is the team behind SWE, they keep launching new products, and the ecosystem also keeps growing. Along with that, of course, we see all kinds of new statistics and metrics which keep reflecting new all-time highs for SWE. As a project, SWE is also killing it in all the big sectors it supports. Sectors like DeFi, where DEX volume keeps making new records with $175 billion. DEXs, perps, and inflows are all surging into year end. Institutions have gained regulatory custody plus liquidity support for SUI. For example, Crypto.com, they recently launched secure institutional custody solutions for SUI tokens. And of course, various native stablecoins are available on SWE. For example, the new native stablecoin USD SUI, that's by Stripe, Circle's USDC, SUI USDE in partnership with Athena, YLDS from Figure, and USDI, which is backed by BlackRock's tokenized money market fund BUIDL, BUIDL. Look, if you have not yet used SWE, or if you just haven't used them lately, come give it a try. And also follow SWE's X account for all the latest updates. Check out the links in the description of this video. We have to also talk now about emotional trading, because if you're trading, and in this case, we mean anything other than long-term investing, so shorter-term trades, if that's the case, fine, but you need to keep your emotions in check. It's absolutely imperative. This is something that retail, for the most part, does pretty badly, but the pros understand it implicitly. Once again, they have methodology, they have discipline. The professionals know that losses will happen, and it's why, along with that money management that we talked about, the professionals are able to survive their losses and then live to trade another day. That is key, of course, since you can't take advantage of better market conditions if you have no money, right? Because maybe you decided to FOMO into some crap coin, whatever the case may be, you have to have that discipline. You have to have that reserve always ready. So look, understanding and controlling your emotions is obviously of paramount importance when it comes to trading. And it's just one more reason why retail finishes last and well behind the professionals and industry insiders. This tweet here is a pretty good explainer on some of the different types of entry points for a trade. Professionals have specific entry and exit points, but most of us don't. I'm not saying all of us fail to kind of consider this, but most of us don't. I mean, you can ask yourself whether you have it, whether you have these specific entry and exit points. A confirmation entry shown here is the most popular. That's when a token hits a certain price or a certain volume based on the indicators, and that signals time to buy, right? Then professionals use the money management tips that we talked about a moment ago in case the trade goes against you. And most of the time, like I said, it will, but that's not something that is necessarily feared. That's all part of the calculation. That's part of the equation. So look, if I were to sum it up, pros and industry insiders don't often have access to better tools than you, but the point is that they know how to use these tools and access them as resources better than you do to improve returns for the most part and also lower risk in the process. What you can do, and what I encourage here as far as some rapid fire tips, I'd encourage you to learn more and better tools for fundamental market and on-chain data. You can also learn proper money management trading techniques. You can learn trading systems. So you buy and you sell based on your system. And again, very importantly, not on emotions. All of these techniques and strategies and methodologies are things you can learn, and you can do it because think about it. Otherwise, we wouldn't be here publishing videos every day for our audience. So I believe in you. I have faith in you. Get out there and put the odds of success in your favor systematically.